The market data I'm going to share with you. Here's the thing. We're not here to try to persuade you of a particular opinion. When the market's going up, we say it's going up. Here's the data. When it's going down, it's going down. Here's the data. Because we have strategies for up or down or sideways, right? You have to be a student of the market. So most of this data is provided by the Texas A&M School of Real Estate and a number of online sources. So let me go ahead and do a quick reset. We got some new people popping online. So hello, everybody, and welcome to the Texas REIAs, the largest network of real estate investor associations in the great state of Texas. We provide resources for Texas real estate investors, 150,000 members, participants, and attendees going back to 2003. And one of the resources that we provide is market data. So we're going to give you a little market data right now. Now, I'm a little behind on our schedule, so I'm going to go through this kind of quickly, and we're getting it into our final presentation. We're going to show you how to do commercial real estate. And I know some of you are this year for that. But let me first share a little bit about what's going on in the marketplace. So this is a summary of what's going on in Texas. The average price house in Texas is $445,000. It's actually up a little bit, 4%, from 1 year ago. The median price in Texas is $347,000. It's up a little bit, 0.6% from 1 year ago. Now, if you only look at one number and you want to kind of what's going on and you just want to look at one number, this is the number to look at. Months of inventory. What is months of inventory? The way to explain this is as follows. How would you explain that? If you took all the houses for sale in the MLS and you didn't add any more, we're just going to take the houses that are for sale, we're not going to add any more. The question would be, how long would they last? How long before they're all sold? The shelves are empty. The answer, 5.7 months. Now, that's also the average amount of time to sell one house. Now, that's average. Some houses sell much faster. Some houses take much longer. That's the average. But let's put that into perspective. What does that mean? They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. So the question is, what kind of a market are we in right now? What do you think? Technically, we're in a seller's market. Not much of a seller's market. It's basically about in the middle, right? Equilibrium. But we're in a seller's market, technically. What happened to the buyer's market? Well, let's talk. History, 2021, prices went up 18% in 1 year. 2022, 10.7% in 1 year. 23, flat. 24, flat. At the end of 24, it went up a little bit. Why did it go up a little bit at the end of 24? What happened at the end of 24? Interest rates came down a little bit. Prices went up a little bit. Not much, basically flat. So why is that? How come we're not in a buyer's market? Well, let's talk. What affects real estate? Real estate's affected by two things, supply and demand. Supply and demand. So what's affecting supply and demand? Well, interest rates. Let's talk about interest rates. Interest rates went up. When interest rates go up, what happens to home prices? Do they go up or do they go down? Well, you'd think they go down. Because when interest rates go up, right, mortgage payments go up, right, they're less affordable. Fewer people can afford them. And when fewer people can afford them, yeah, less demand, less buyers, less demand. When there's less demand, prices go down. But there's some offsets. What are the offsets? Normally, 2/3 of houses that are for sale are resale, and 1/3 are new construction. Right now, it's inverted. Why is it inverted? Why aren't people selling their houses? Got a 3% mortgage, they don't want to give it up. Yeah. People should be selling houses. Honey, let's get a bigger, nicer house. We got a job, the economy's not bad. Yeah, let's get a bigger, nicer, but they're not. Why are they not selling their houses because they don't want to give up their 3% mortgage. So yeah, demand is down, but supply is down. And when supply goes down, what does that do to home prices? Pushes them up. So we got things pushing down, we got things pushing up. Another big factor when you're in Texas, remember supply and demand. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Pretty obvious, right? Yeah. And there's another 10 million people, we don't know where they went, but there's a bunch of them here too. And they all need a place to live, right? And here's another problem we have. And when there's all that influx, what does that do? More demand, what does that do to prices? Push up. So we got things pushing down, we got things pushing up. We got another problem. We don't have enough houses. You know that? Do you know we're in the middle of a housing shortage? Who's heard that? Yeah, we have 6 million fewer houses than we need for the number of people that need a place to live. And we don't have enough houses. When there's a housing shortage, what does that do to home prices? Pushes up. So we got things pushing down, we got things pushing up. Okay, and that's an offset. And where there's an offset, what happens to prices? Flat. So flat. We do commercial, we do residential. When interest rates go up, cap rates go up, prices go down, right? They get compressed. Apartment buildings should not be doing well right now. Prices have gone down, people trying to sell these apartment buildings, price went down, but there's an offset. Apartment buildings are full. Why are apartment buildings full? Because we don't have enough houses. If you don't have a house, you live in an apartment. Mobile home parks are full. Why are mobile home parks full? Because we don't have enough supply. So that's the offset, right? And when you have, things pushing up and things pushing down, the market's flat, right? It's really flat. Down a little here, up a little there, not much. What do we expect to happen? Well, here's the thing. I'll give you our forecast. And I'll tell you, we've been doing this forecast. This is not my forecast. I just report the data. These are market drivers. The economy's doing pretty good. Interest rates are high. Supply is not great, kind of flat. Demand, got a lot of demand. So here's our forecast. If you were looking for some big crash in the market, that was probably it. And there wasn't much to it. We expect interest rates will probably, nobody knows for sure, drop a little bit, but not much. Maybe 0.5% between now and the end of the year. And that'll probably juice the market a little bit, not much. So best calculation, I don't think there's much going on. We don't think there's much going on. We expect the market to be basically flat for the rest of the year, maybe up 1%, which is not much. Because there's just not many big things, right? I don't think interest rates are going to fall 5%. I mean, there's just not much big stuff. Texas is still a great place to live. People still having babies. People still moving here. Still have demand. We're not building enough houses. We're not going to have a bunch of million houses, built in the next, 6 months. There's just not much happening. So shy of a nuclear war or something very big and unforeseen, that's about it.